following program is a presentation of the Weekly Credit Report.
Being that, and which is fine, that's not a bad thing. But you're still spending money or losing money if you're not doing something correctly. So it's not about just listening in and be like, well, he's talking about businesses. We're not really a business yet. Look, if you're not set up right, regardless if it's one employee or 101 employees, there's avenues and there's specific setups correctly and incorrectly to obviously maximize your deduction value, correct?
Exactly.
So going through that, and then obviously there's much more to it, and there's much more, there's other levels of how to save money, how to set up certain things, payroll or paying yourself, and you can S Corp. And, if you have questions on those kind of things, give Scott a call. I know Scott answers his phone all the time. And actually, him or any of his client coordinators and advisors over there will answer. How do you get a hold of you, Scott? Where should people go? What number should they call? So grab a pen and paper here. Call Scott a call. You do free consultations, correct?
I do. We offer a free consultation. You get an hour of my time to ask any question that you'd like. Could be about taxes, could be about opening a business, could be about IRS difficulties or those love letters that they keep sending you and you don't know what to do with.
How about if I already have a really good CPA, Scott, and I like them, but I just want to double check if they're doing my stuff correctly?
We also give what I call a free tax review. We'll take your tax return, personal, couple years of your personal return, possibly a couple years of your business return. We will redo your returns at our expense, no cost to you, and we'll just take a look at seeing what the results are. Most of the time, we find something that needs to be changed, or we find ways to get you more money back. And about half the time, we were able to amend the returns and correct the things that needed to be done, and it puts more money back in your pocket, where you can take that money and have it available for next year.
100%. And the thing is, this is very simple. Scott saying that is the 100% truth. There's not that many CPAs out there that I know that are live on radio shows and partnered up with radio shows. So when it comes down to it, he's elite. He's one of the best that I've seen. He's able to take companies that they feel that they're doing the right things, they're connected with the right CPA, and he's able to redo their taxes, put them in a better light, put them in a better category, and save them money that you're able to put back in your company to make more money, or yourself, or your personal taxes. I mean, that's the broadness of this. It really, everybody, what do they say? Death and taxes are the two things that you can guarantee. So it's one of those things that you can't avoid. You got to take care of it. So knowing that it's free, knowing that it's no risk, knowing that he can go through the taxes and really for a free analysis and really take whatever you're doing currently and just look it over and make sure it's being done correctly. There's no risk. So what is
Joe,
the contact number?
Let me give you that number.
Yeah.
It's 952-808-8798. And if you want to get directly to me, hit extension 200. Again, that's 952-808-8798. And my direct extension is 200.
And that's Scott Binion with Haugen Binion CPAs out of Burnsville. Obviously, we're connected with him. We're partnered. I'm connected with him. We're against the break, though. It's quick. You're listening to the Weekly Credit Report. This is Joe McGlynn, United Credit Consultants, UnitedCreditConsultants.com. Give us a call anytime. And our number, our direct line, if you want to give us a call, obviously, 800-455-4100, 800-455-4100. We'll be right back. This is Twin Cities News Talk, AM 1130. Welcome back. You're listening to the Weekly Credit Report, Twin Cities News Talk, AM 1130. I'm your host, Joe McGlynn, president of United Credit Consultants. We are your weekly source of credit topics and education. We're talking about foreclosure, bankruptcy, short sale today. How does it affect you? What does it do? What are your rights? How does it affect your score? How does it affect your buying power, future purchases, all that good stuff? So there's a lot to talk about. We had Scott Binion with Haugen Binion CPAs out of Burnsville just recently on there talking about tax reviews, talking about all that. If you want to reach out to Scott, what's the number one more time just to make sure?
952-808-8798, and my direct extension is 200.
Perfect. So let's switch gears a little bit and go back to the topic of what we were going through in the morning here is the foreclosure, bankruptcy, short sale, and really take this information for what it is when it comes to if you never had one of those three. Don't just turn the radio off and say, well, that doesn't apply to me. Really, the process and the understanding of the investigation of how we work and manage our clients really works with collections. It works with late payment history. Know that even if the account's closed, it still is affecting your credit depending on what else you have on your report. So just know that. So if you have any questions about those things, if you want to call in live this morning, it's 651-989-5855. You have a question for Scott and taxes, you have a question about foreclosure, bankruptcy, short sale, or anything credit related, give us a ring, 651-989-5855. But let's go through the three right there. Foreclosure. How does a foreclosure affect your credit? So the reason a foreclosure naturally affects your credit more than, say, a collection account or a late payment on a credit card is because what the bureaus do and how, Kroll and those third-party entities that bring in all your information on a tri-merge report is they rank your accounts in order based on importance. And they do that based off of your balance, okay? So if you typically had, say, a foreclosure, Ryan, it's a mortgage, right? So
That's
typically
correct.
most people, if they owe money on a mortgage, then it's typically your largest balance owed, right? So it's your number one trade line. So when you do something positive, it's going to impact your score in a positive way more than, say, an auto loan, student loan, credit card, because it's your number one account. If you're missing a payment or 2 or 10 or 100, you're doing something that's negatively impacting your credit more than any other account. So it's a win, and it's a high, reward, very low, it's a massive, deduction in points if and when you do specific things to your number one trade line because of the balance, right? So the foreclosure verbiage, Ryan, people get confused on this, but they aren't aware that the word foreclosure
Doesn't hurt your credit score at all.
Words don't affect your credit, correct?
Right.
Yeah, so go into that and tell people, how does a foreclosure then, in what part of the foreclosure account, what does that affect, and how does that affect your credit?
If you think about your scores and if you think about your scores as an algorithm, numbers affect numbers. So what's actually affecting your credit profile and your credit scores on that is the late payments.
Mm-hmm.
And I think what Joe's trying to get to is that on a foreclosure, you might have vacated the property or whatever the case is, but those late payments just keep going and going and going.
Until the house is sold, right? I mean,
Exactly.
Until the house is actually out of your name. So when it comes to a foreclosure, yeah, it's really one of those where the late payment history is affecting your score the most, or the late payment history on the given foreclosure account is what's actually affecting the profile and the score. And what people get a little confused about, I think, is that as soon as they move out, or when the foreclosure hits, or whatever the case is, when the sheriff knocks, oh God, now I have a foreclosure, that's really going to kill my credit. Well, the truth is it's hurting you the most actually during the storm. It's actually the worst part of the process is actually when you're going through it. When you leave, when the house is sold out of your name and the balance then hits a zero, or they write it off or they charge off, and that's a different story, and the balance hits a zero, that's actually going to start helping your credit in your profile, because your balance is zero. Your number one trade line that was most important in your credit goes down to your 5th page, because it's obviously all the other accounts that have a balance are going to be naturally impacting your credit more. As weird as that sounds, you might have a $40 collection copay back in 2008, unpaid for $40. That's higher in value when it comes to, depending on the situation, but could be more important when it comes to the impact of your credit report and score than, say, a 2006 $500,000 foreclosure that had the balance of zero. I mean, it's all dependent, but that's the technicality of the scoring system and the formulas and how the system works. They can't judge it on a case-by-case situation. They have to judge it on an umbrella-type format. It's 350 million Americans. Everyone's got to fit under the same roof. Everyone's got to sit in the same type of system, and they all judge people on the same way, because then no one's suing the banks. No one's saying, well, you judge me because of this and that. It's, sorry, everyone's judged on the same criteria. This is the way it is. This is why it's affecting you, and this is what your score is, and this is what you need to do, X, right? So when it comes to a foreclosure, and then again, a short sale is the same thing. It's just that typically banks will tell the person that they have to, become late to show that they're in a hardship to be able to sell the house for, a settlement offer, more or less. So what you need to do is understand that foreclosures are, investigatable, okay? You got to realize that short sales and bankruptcies are investigated. You can challenge the validity. You can go after and make sure that the information that's on your report is accurate. It's correct, right, Ryan? I mean, how many people do you know, Ryan, specifically get letters or get calls from the credit bureaus making sure that the late payments that they have in the report is actually true, right?
Joe, believe it or not, I have never had one single person that's ever gotten a call from the bureaus.
Yeah, so if you're sitting there listening to the show this morning and you know someone, or it's you, or really anything on your report, if you got 19 late payments reporting on your history of your foreclosure back in 2007, think about, are you 100% accurate? Do you know for sure that you had 19 late payments on there? I mean, will you bet the farm on that? And if the answer is no, which I know it is, make them prove it. Make the bank verify and validate that these lates are accurate. They have history of proof. They can verify it. All that. And if the bank can't, and if they don't want to, which they won't, if there's no money involved, which there probably isn't at this point, it's been written off and they've gotten their money back from the government, all this XXX, right? It gets to a point where what is the motivation for the bank to verify and validate the validity of a 5-year-old account and there's no money to be made? It's not about cheating the system. It's about knowing your rights as a consumer and knowing that these companies have never looked into in the first place, right?
Knowing your rights, knowing that you have rights.
Yeah. I mean, a lot of people don't even know that you can even investigate something. So making this information and looking into it and questioning the validity of it, if these banks don't verify, the information's removed. So therefore, I mean, I'll tell you right now, on air live, we have removed foreclosures off people's reports before because these companies have not validated and verified what they had told the bureaus at one point is accurate and true as of right now.
That's why the success story that we talked about earlier in this episode is that we were able to, in 30 days, we were able to get 9 out of 13 negative items on Will's report, get it permanently and legally deleted from his report. That's why.
And the same goes for bankruptcy. Right? I mean, the same mindset for a bankruptcy to a foreclosure to a short sale is all the same. Now, when you read these requirements from, FHA, VA, conventional, it says everything, it's always about, for FHA, the standard loan, it's 3 years for a short sale you have to wait. Chapter 7 is 2 years. Foreclosure is 3 years. And it says with reestablished credit. Now, that's where I think people get confused a little bit is, just because you've waited 3 years doesn't mean you can turn around and you have the right to go and buy a new home or get a new home. What it means is that you have the ability, if your credit has been reestablished, you've built it back up, you've cleaned it, you have the opportunity now to be pre-approved and qualify for a lending situation, okay? So that's the key in understanding that if you are 1 year, 6 months, 2 months, 2 weeks, a year away from a foreclosure, there's building options, there's buffer tactics that can be done on our end, United Credit Consultants, to really implement and put yourself in the right light to save you money now. And then the day you're able to go and, pre-qualify, you're able. Then it's not that you're starting at that point and then it's another year and a half until you've built your credit back up. You know what I mean? So there's a lot that could be done. There's a lot that needs to be done when it comes to putting your profile back together rather. To get you in a position to where you have good interest rates and you're able to save money and you're not having to pull teeth to borrow any type of lending situation for an auto loan to anything really. And people listening in, and I think people get confused and the way we talk sometimes is we harp on, getting yourself in a position to buy a house or a car. It's about options, okay? It's about knowing that you have the opportunity to get something if you need and when you need something. That's the whole point. It's being proactive. We got a track runner in the house here, and I use that as an analogy. You look at it like this. You don't want to find out that you're out of shape when a dog's chasing you down the road, okay? It's kind of the same feeling. You don't want to find out there's something wrong with your credit until you're in the lending, the finance office of the car dealership, and you find out there's something wrong because you need it then. Be proactive. Figure out what's reporting. Consultation's free with Ryan and any of the guys here. It's like take advantage of, let's look into the credit and see what's going on.
You got nothing to lose.
Because unless you're 99 years old and you're never going to borrow money the rest of your life, there's going to be a time where credit's going to be required and it's going to be needed and looked at when it comes to lending to a cell phone, to car insurance, life insurance, all that stuff.
I think that's a huge thing too, is because, we a lot of times we focus on the auto loan and the qualifying for a house or a mortgage, but there's so many other things that people don't realize that are affected by your credit that, like Joe said, you're not going to know that you're out of shape until you're getting chased by the dog. You're not going to know that there's something wrong with your credit until you're applying for a new job and you don't get that job because your credit is messed up.
Or you got Scott telling you that we can get a $5,000, offer and compromise on a $100,000 IRS debt, and you don't have $5,000, but your credit's in a position to where you're able to borrow $5,000 on an unsecured loan at the bank for 4%, and you're able to get these options. And I'm not saying to borrow money to rob Peter, pay Paul. It's about knowing you have the opportunity and options to have that flexibility. If you want to give us a call, you want to talk to one of our advisors, give us a call anytime. We have client coordinators in-house right now. It's 800-455-4100. We're in the Twin Cities. We do free consultations. It's one-on-one. with our clients. We have a few, Ryan, I know you have a few meetings today here.
Yeah, I have 3 appointments today. And we're going back to the office to follow up with people that called in during the show right after.
Yeah, I'm looking at my phone, like I was saying earlier. I mean, we got a ton of calls coming in here. 800-455-4100. Give us a call today about your credit issue. But I want to get back to that last piece a little bit here before the show wraps up, is just understanding that bankruptcy is the same understanding of foreclosure. Even though there's a waiting period, there's tactics and there's issues with bankruptcy stuff. A lot of times when the bank gets the information of bankruptcy, they send your file off to different, floors, to different companies, not companies, but different buildings, different states within the bank. If it's Wells Fargo or U.S. Bank, a lot of the information is not verified and updated to the bureaus. So you're sitting there with a bankruptcy thinking that, I don't even want to look at my credit. There could be balances still reporting. There could be misinformation that's still reporting. There could be accounts that were not in bankruptcy showing as a bankruptcy. So all those things tell me, a big red, flashing light, that as much as you think that sounds, oh my God, I cannot believe that, I'm looking at it as a positive way, because that tells me the bank did not care. They care so little about your file that they didn't take the time and spend the money to update the bureaus. That tells me that if we question the validity of it, chances are they won't verify it because they didn't care enough in the first place, right? So you don't,
correctly.
You don't know until you try to make sure that these companies can prove what they had said at one point is accurate, right? I mean, make these companies verify and validate what they're saying is accurate. Don't get judged on misinformation. We get judged on everything else. Let's not make this information that's not filtered ever by the bureaus be judged on thousands of dollars of your interest based on information that you don't know 100% that it's verifiable and accurate. That's what we're doing. And obviously throughout the process, Ryan, it's building and all that good stuff. But Ryan can give you more of that information off air. Jared, Nate, Brian, any of the guys that are obviously on our team, the largest company in the state for a reason. We get the job done, honestly, and the consultation is free. It doesn't hurt to see what's going on to get you back on track. It's spring. I think it's spring out there. If you want to talk to Scott, Scott's information is on the weeklycreditreport.com. Scott, what's the website for you guys?
It's www.haugen, Haugen, Binion, B as in boy, INION, CPA.com.
And also, like I mentioned, it's also on the weeklycreditreport.com as well. But if you want to reach out to us, give us a call anytime, 800-455-4100. This is the Weekly Credit Report, UnitedCreditConsultants.com. We have a contact us page there that you can fill out. But we're done. The show goes so fast. We'll see you next Saturday. Enjoy your weekend, and we'll see you next week, everyone.
And Evan, good luck on your track meet.
Yeah.